The silver market is on fire and the price is all over the place. How smart people are buying silver today? Let's understand. I was browsing today morning in Google. If we search what's the price of silver in Mumbai, let us assume 1,87,000 rupees is today's price. In physical market, Mumbai. This might vary a little bit in different cities and different jewelers also. ETFs are ranging somewhere between 162 to 168 rupees per gram, which will, if I average it out, it will come to roughly around 1,65,000 rupees per kilogram average. So some ETFs are quoting slightly higher, some are quoting lower, because again there is a squeeze in ETF market also. Some of the AMCs have stopped accepting large sums of money because the physical metal is not available to back up their ETFs. Third option, and the one which we are discussing today, is to buy on MCX or the derivatives market. So today is 13th October, at around 12:30 we are trading at around 1,52,000. So most of the prices, just for the context I am giving you time and date. What happens is, when you have to buy derivatives, of course you need to be a smart investor. You have to understand the derivatives. The derivatives comes with the cash flow issues, because in physical market today, if you buy silver at 1,82,000, 85,000, whatever it is, and keep it, tomorrow if the price falls by 5-10%, nobody is going to come and ask you money for it. Even in ETFs it is similar case. Even if it falls, nobody asks you money for that. So you are sitting comfortably even the price goes down. But in derivatives, of course, if the price comes down by a little bit, you have to pay the mark to market. So that actually makes this slightly complex, but the smartness is always in dealing with the complex problems. So if you are going to pay 30,000 rupees more for the same quality of the asset, it makes no sense for me. So the smart guys can buy silver on MCX, which could be current expiry, that is November, or March expiry, or even July expiry. Even the further expiries are trading at much lower price. The current expiry is trading higher, and the next expiry and the next one are trading lower to the current expiry, approximately around 1,500 rupees. So if you are long, that means whenever you are rolling over to a lower price. That means you are actually improving your price, number one. Number two, today the margin on silver is at around 12%. So I would suggest to keep 30% as margin, so that at least 10-15% mark to market can be taken care of and you don't need to be bothered for mark to market purposes. So if I assume 30% on the current price, roughly around 45,000 rupees per kilogram of silver you can invest to buy 1 kilogram of silver on MCX, and the rest of the amount, you're still, if you are buying physical silver, it's roughly around 1,87,000. So rest of that 1,41,000 is still with you. You can put it in a 1-year bank FD, which will give you around 6.25%. So that will actually give you additional returns over silver returns. So if we look at after 1 year, what happens? After 1 year, I'll give you all the three formats: physical versus ETF and the MCX plus FD. So after 1 year, if the silver prices goes up by 10%, so actually in your physical investment, you might not even make money. In fact, you will lose money, because you are already buying 20-25% higher than what the price is today. So even the price goes up by 15-20%, you will still not make money at the current price of the physical silver. On ETFs, because ETFs are currently quoting around 8-9% premium, so at 10% higher you will make around 1% or hardly will break even. And at 50%, and on MCX, if the price goes up by 10%, you'll actually make roughly around 15-16%, because you'll get 10% profit from the silver price plus another 5% returns, because you're putting around 70% in a 6.25 FD, you'll get another 5-6% on that. So the 10% higher silver price, you'll actually make 16% return. Similarly, when it is 20%, you'll make around 26%. If the price goes up by 50%, you'll make by 56%. Even if silver goes down, let's say after 1 year, if we assume silver will go down by 10%, in physical silver you will actually lose more than 30%, because you're already paying 20% higher. And on MCX, because you get the cushion of FD interest, your losses will be lower compared to the actual silver price. So the smart way of buying silver today is MCX. You can log into Rise application of Motilal Oswal, search for silver and go and look for either March expiry or July expiry, and you can buy that. And on the additionally, if you are smarter enough, you can also hedge this position by buying a put. Currently, if you are actually buying October contract current month, a 5,000 rupees out of the money put as a hedge, because we are buying silver at an all-time high, and whatever everybody says, there is always a risk in financial markets. So if you want to hedge, currently a 5,000 rupees away put is quoting around 2,500 rupees. So that's your additional cost per kilo. And if you're going to slightly ahead and look at the next expiry, around 5,000 rupees per kilo is your hedge cost. So rather than paying 30,000 rupees higher in physical silver, you can actually pay 4,000-5,000 rupees higher on MCX and also buy a put, which will give you a downward protection and keep you invested and ride this rally much safely. So log into motilaloswal.com or download the Rise app and look for silver. We have also published a latest report today, an exclusive report on silver and its prospects for the next 4-5 years, that Vision 2030 for silver, and that exclusive report is available on our Rise app. The link for that will be in the description below, and you can go and check that out. All the best. Happy festivities, happy Diwali. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.